It's Adam Sliver Trade here back with Bones for episode 3 of Not Financial Advisors. Thought we'd start off with some good EDM vibes because DJ Sliver's in the building. And Bones, how are you doing, man?
I'm doing great, man. Definitely like your little piece there with some nice DJ work. But I can't complain. Got some pretty cool topics I think today, and things. This week I feel like it's definitely been tough for some traders. Somewhat unusual action, I'd say, on the overall market. But it brings up a big point we talk about a lot in bias and what really bias is versus trading the price action.
Right. So for you, Bones, we can go look at the Merriam-Webster definition for bias, right? If we wanted to, but I kind of want to. First thing I want to do is I want to dig into how me and you each define that word. So I want you to kind of give a little brief description. What does bias mean to you, and then I'll take my turn, and then we can kind of speak about how we play that into our daily routine.
Absolutely. So I'd say for me, definitely not a Merriam-Webster type definition, but for me, bias is trading that one side. And for example, this week, we had that big gap down. I believe it was Thursday. It was Wednesday pre-market into Thursday trading day, and we opened at like 410, I believe, was around the low of the day, and then absolutely rip right off that. Like we're up to what 438 ish or something like close. But people were super bearish because we had that Ukraine news, we had the Russia war news, and everyone was super bearish. And just because of this news, I feel like people were so eager to just slap puts, right? And to me, it's like having that in your mind that I'm just gonna slap puts, like the market's gonna go down. That to me is right now what bias means. But the overall meaning to me of bias is playing that one side and realizing markets, it goes up and down. There's going to be days where puts do pay, but there's also going to be days like we saw the last couple of days where calls really, they paid. That's simply as I can put it.
Sure. And I like exactly what you said, and I want to add to that because the interesting thing about bias to me is it seems to coincide with what almost the majority of people think, right? So if you have a bias, it's probably impacted by mass sentiment, if I had to guess. So I feel like bias is it's a representation of kind of how you feel and how you relate to mass sentiment. And so, for example, everybody's thinking, yeah, I mean, obviously puts have been paying basically every day. You could just wake up and buy puts and they make you tons of money. Okay. Well, then what happens on Thursday, right? We gap down really hard and then nice rip off open before some consolidation and then rip back up to fill the complete gap. So from there, it was just straight up. I mean, parabolic on Friday. Okay. What can we take away from this? So, sure, the news, and it's been a big theme, has been almost bad news is good news, which has been the weird thing with the Fed lately. And I'm sure, Bones, you might have something to say about this, but it's almost okay. The worse the news is, the more we continue to go up. I guess when it comes to some of like the monetary policy and stuff, but it just like it's been a weird paradox. But here you can see that, right when everybody is so bearish, that's when things turn around and catches everybody off guard. So for me, realizing that bias is there, recognizing that I'm thinking, okay, is there ever any reason that this should go up right now? That's when I think, okay, maybe it will go up. It's the contrarian in me, but at the same time, I'm thinking if everybody thinks the same thing, then, or if at least everybody seems to think the same thing, then the opposite might be bound to happen. Does that make sense to you, man?
Yeah, absolutely. I say like when it comes to price action right now in this market is the perfect time when we really exemplify, price action over bias. And that has really stood out to me the last couple of trading sessions. That those puts, if you held overnight Wednesday, absolutely paid off open. If you sold them right away off open, they absolutely paid. You probably around break even after that, depending off if you have weeklies or not. But just being able to trade the price action has really, really been something that I think has been amplified in this market, especially when it's been a little bit choppy before that. Puts definitely paid more toward the later, the power hour type. But now we have this flip where bulls in massive control. That candle on Thursday was gigantic, right? Absolutely massive candle, and it continued into Friday. Me personally, I was watching that 430 area on Friday, and I honestly thought we'd hit it and get some consolidation around the area, more of a sideways trend day, and I was wrong. Absolutely ripped through that area, pushed through 435 pretty easy, and a little bit consolidation, but we pushed through this level pretty easy. And I think that also was, I still had bias in myself. I was still bearish on SPY at the time, um, deflecting off that 430 level. But just being able to realize, shit, I was wrong. Like, there's another side to play, and just really amplifying and being able to trade both sides, trade the price action over our bias. Because I mean, personally to this day, I still have bias, right? Like, I may
Yeah.
be leaning one way, but when that price action comes, that's when I act, right? I react off my levels I've created, and then obviously off of price targets above. But I also like to use candles, just because it kind of gives me a sense of what other people are thinking. Because I'm not the only trader in this game. If I was, it'd be pretty easy. But there are so many people out there, so I can kind of get a sense of what price people are willing to pay, in terms of if I'm going to buy calls, and also when sellers are going to step in if I want to enter into puts. So this is something I think can really, really help not only my trading, your trading, anyone's, is just being able to trade the price action, as opposed to a bias. And this market's definitely been hard, especially if you're very, very biased, to come out green.
Right. Here's something that I've found, and lately, maybe the last couple weeks, most of my mistakes have come from I'm coming into, and I'm realizing this, I'm coming into, a play or a certain day, and I'm saying, okay, well, there's gaps all over the place to begin with. So either we gap up or we gap down. I'm saying, oh, okay, we're just gonna gap up. We're gonna go down. We're gonna retest some levels, and then we're gonna bounce. Right? That's maybe you think that's what's gonna happen. And if that in and of itself can be a bias. If I'm setting out some sort of mental plan, that I think is going to happen before it even presents itself, I'm almost already setting myself up for failure, because if I am trying to dictate that, okay, this is going to be a range bound day, or this is going to be a day where we just simply go down and fill the gap and then bounce, then I could be setting not only my head up for failure, because say I'm thinking that. I'm thinking, okay, we're just gonna hit some support. We're gonna find the support and we're gonna bounce. Maybe I'll add calls on support, and then if we break down a little bit, maybe I'll say, oh gosh, and then I'll average down a little bit at the next support. Okay, what happens if it keeps dipping, right? Are you going to be inclined to continue to average down, or are you just going to just cut all the losers? I mean, at that point, it's a pretty bad loss. So, to what you said, Bones, it's really important that right now we're doing a lot more observation. And honestly, this isn't even just a stock thing, in life and the people around us and our relationships. I think we should do a lot more observation, a lot more taking things in, a lot more listening, a lot more watching, and a lot less acting, because inaction is almost more important than action. Knowing when to not do something, knowing when to not trade, knowing when to not say those words, knowing when to not, get in an argument, those type of things, like that's almost just as valuable. Knowing when to sit on your hands is so valuable. And I think some of the people who have really come out of this month trading wise, the most maybe confident or comfortable have been the people who have been taking it slow, taking it steady, practicing sitting on their hands and waiting for A plus setups. And, it's impossible for all of us to feel perfect about our performance. But just because this market has really inspired a lot of FOMO, a lot of these midday moves where, or, end of day moves where usually on it, typically you wouldn't be playing these, halfway through the days when the market starts to just dump for the rest of the day, a 3, 4 hour dump, right? I'm usually not looking for that. I'm usually not trading during those hours. But now what I've found for me, and kind of want your take on this too, is based on the weirdness of what's kind of been going on, we're in a situation where we need to be more alert. Okay. And when we're being more alert, that can definitely lead to over trading. But not only does it lead to maybe over trading, but it's stressful on our mind and it takes up mental capital when we know that, I could be missing something, you know?
Oh, absolutely. And I'd say a way to kind of go about that is have a schedule, you know, or a goal. And if you hit that goal, shut the computer off. That's the hardest thing for me is if I'm looking at the computer, I want to trade. So the way
Sure.
that I found I can conquer that is, just shutting it. Other than that, I do feel like I'm missing out. And that could also be a Twitter thing. I know, you see these big gains. It could be later in the day or when you're not trading, you're like, damn, I missed a big move, stuff like that. But it's like, you know, how did I do overall? Did I respect my rules? Being green is definitely cool, but more so, I feel like in this market, it's really important. Did I respect my rules? Good discipline. Did I take setups and was I confident in these setups that I was going to come out profitable? And I think that's something that's also amplified. You talked about a lot, uh, you know, being patient in this market. It's definitely been hard. For me personally, Thursday. So Thursday, I got in calls pretty early when we broke 420, and I did not expect a big move up towards 430, and we got that move. And I actually overnighted the calls, kind of not my favorite thing in the world to do, but there was such a big bearish bias at first. And then when the Bulls started stepping in, right, there's this huge FOMO. And to me, it was like, I only have runners left. There's a bunch of FOMO coming in. And thing that I've noticed, not only about myself, but just like the overall market is when a move goes down fast and then we bounce, the bulls are the people who have, expected a big bounce really come in hard. And that to me was like, right here, I just have runners, so I can let them run. But I did not expect to move past 430. I talked about it a little bit earlier, but to me, that was more of a, wasn't, something I had in my trade plan. It wasn't something I expected. And that's another big thing for me is, when I do get these bigger gains, it's always the plays I don't expect. The plays I expect to go big, those are usually the busts of the day or they're range bound, and it kind of pisses me off. I'm not gonna lie, but it's more, when I do respect my rules, not expect anything crazy. That's when I notice, those are the runners, and those are the ones that they're just runners, so I can hold them as long as I really want, set a break even, whatever I want to do. But it's just profits running. It's just making money if they run up. If I'm stopped out, cool, so be it. Move on to the next play. But it really is something in this market again. That FOMO has really, really came in heavy in both directions. The put side getting slapped down for a week or so, just terrible action, in my opinion. If you're a bull, but then on Thursday, we get that flip, and the bulls push up super hard. Really big bullish candle Thursday, continuation into Friday. So that FOMO is definitely something I've experienced in terms of coming in very, very heavy around, and another thing is that's a huge psych level at 410, right? Like, 410, big, big, big level right above 400. There's a nice VPA gap on the daily down towards 400, a little bit below. So that was a very, very crucial spot for the Bulls to try and make a push because there was nothing holding that thing back from 400 except for that 410, 405 psych levels. And we see that nice intraday push throughout. And, that's something that really stands out to me, especially in this market, is how heavy one side comes in. And I think a lot of that is due to a bias coming in and also that fear of missing out, FOMO, missing out on the big move. Because you do see these things on, Twitter, the Weeble cards, people trading SPY that are 1,000 percenters every single day on SPY. And, that gets to me too, is like, could I have stayed in that play longer? So that's something I think is more of a discipline side of things as opposed to actually due to market sentiment or overall trading action at this point.
And I think it's very important to note that with this FOMO that you're talking about, there's so many factors that are sort of going into why this is happening. Why is this FOMO so engaging? Why is it so much more prevalent, honestly, than it has been in a really long time? And a lot of it has to do with kind of the news that's going on, right? I mean, we can't say that the Russia Ukraine news isn't having an impact, right? It definitely is having an impact on the things that we're seeing. But I mean, it's clear that that gap down before Thursday was spurred by the Russia and Ukraine. I mean, you go look at futures as soon as the news came out, boom, dump, right? But what's to explain? I mean, same exact thing. Like Russia is still invading Ukraine, and we just go rippy for 2 straight days. I mean, so there's while the news is very important here, we can't take the news and let it feed into a certain bias. I mean, like it's very, very important to be informed on not only what the Fed's doing, QE, QT, the rates increasing, all of this very important stuff. Keeping up with everything that the Fed has to say at the same time as this possible war going on, you know, it's almost you almost need to take the news with a grain of salt. I mean, this is just my personal opinion right now, and I'm sure there are plenty of people that disagree with me, but I think the last 2 days have been proof. I mean, not even the last 2 days, last 2 weeks have been proof that you can be attentive to the news, but don't let the news be sort of the main factor in your decision-making process, because as soon as you let something that isn't candles on a screen, as soon as you let something that's not the candles decide what you're doing, you tend to fall into this trap of thinking that some outside thing is going to feed into what you're seeing, but instead all that you have is what you're looking at. Focus on the present and play what's in front of you. And I know that that's been super hard. And then either you're on the right side or the wrong side. We've seen some extremes. And the most important thing is if you catch yourself on the wrong side of it, don't let things get worse than they should be. And what I mean by that is I'm constantly telling myself, like, if I end up getting super bagged, like I enter a position and I'm immediately down, it seems like I'm almost down 20% instantly, right? I mean, we all know that. I mean, you enter a position, you're immediately red, or you enter a position and the bid ask spread is pretty wide, so you start off a little bit red, and then you get a couple down ticks, and there you go, you're at minus 20%, you're stopping out. You know, we're all there. We've all been there. But it can always get worse. Don't let it turn into a situation to where you're minus 20 and you're like, "Oh, okay, well, it was just back up there, so I need it to go back up." It can do that. It was just there. You know, Suddenly it's at minus 40 and then okay, it's at minus 40. Well, that's basically minus 75%. So I might as well just ride this. And then suddenly, mentally, you're just like, you know what, screw it. I'm letting this ride to zero. And Bones, I'm sure you've been there before. I've been there before. And the thing with that is, especially in this market, is so unforgiving right now that we have to be on our A game mentally. Because you can see if you held any sort of puts, I mean, you could have made money on little put scalps. That not going to lie there, but um, if you've been feeding into some sort of bias and then trusting, or maybe having a pride thing, um, thinking that what I'm doing is right. However, the market is not doing what I think it was going to do. You have to be quick to establish that mistake and move on past it, because right now is very unforgiving. I've seen a lot of failure. I've seen a lot of people and heard from a lot of people who are just really struggling right now. I've had some tough days, and this is just unforgiving. So whether that means you size down, or whether that means you even take a break, take a step back for a couple days and just do more observing, like I said, or whatever it takes for you to get your head in a good spot to where you're not fearful, you're not having FOMO or anything like that. That is what we need to be working on right now.
Yeah, and what you said in that about pride, I think is something that I is very intertwined with bias, and it definitely feeds into that bias is having pride. And for me, a big thing was thinking that whatever I did, when I first started trading, I thought that I knew way more than I did. Obviously, PayPal, a very good example of that. But having pride, like you can be prideful and still not have bias. But when you let that pride and that bias combine, that's when it's detrimental to your account and it can move fast, especially in this market. That's another thing I've really noticed is when a move does come, it comes fast. It's not like, if you don't have risk management in place and maybe you're using, a 10-15% mental loss, in this market, it's going to come fast. And next thing you're down that 30-40%. And you're like, oh, I got to sell here, right? And it's just everything breaks loose. Your system breaks loose. And then you feel like a bad trader because of one bad thing. But that's just how the market's working right now. Really, really quick moves. And when they do move, it's fast and one side is in control. On Friday, I did notice that towards about 2:33 into power hour, the puts were starting push down a little. Sellers are starting to push down, and then there's on the 5 minute there's a nice hammer candle, pretty good volume, and it just took off. Like I think the next candle broke fully out of the consolidation range, and it just kept pushing into the end of the day. And that was, if you're in puts there, and you're not out on that hammer candle, you're down. Like you're down fast. So that's one thing that I definitely have noticed a lot is, the importance of risk management in this market is super, super important as well. And I think hard stops are definitely more important right now than they ever have been, just because things are moving so fast when they do move. And that's one thing I think that I learned, from losing early was, having that in place. And for me, it was always a discipline thing for the hard stop losses, but it's really helped me in today's market, especially right now, with those quick moves, is just having that discipline and respecting those stop losses. Because most of the times when I do get stopped out and I look back, it's like, oh, wow, I would have lost like 50% in the next two candles or something like that. But I had that stop loss, and the beginning trader in me would have probably averaged down and been like, oh, this will go back up. It's just a dip. Buy the dip is a big thing we hear. And I definitely would have bought the dip, averaged down. And especially on weekly contracts, if we're trying to day trade, we don't want to let those turn into a swing. I guarantee the next day you might get a pop off open. You start to get this, that pride. Oh yeah, I was right. It's gonna tank. It's gonna come right back up, and then it just absolute knife, and you're down. It might fully expire. And at that rate, it's like, wow, what do I do, right? So that's a big thing, especially in this market, especially just trading in general, that I struggled with to start, still struggle with today. But I think trading price action, having stops. Personally, I'm a big fan of hard stops. Just helps with discipline, but having some sort of risk management in place can definitely help your account. And the big part there is being able to trade tomorrow. You talk about mental capital, but also just having capital in general to trade tomorrow is it's more important than your pride or your ego getting in the way and blowing up an account. That's what happened to me early. And it happens.
Yeah. Yeah, man. I mean, this is it's just a lot on the mental. There's so much stuff that we can be thinking about right now, and there's which the more that you can think about, the more that you're subject to overthinking, right? And I almost say, the less you think in trading, the better, just because if you keep thinking, then you're bound to overthink and analysis paralysis, and then kind of have this sort of. And actually, we're going to talk about this topic next week with Drippy Too Hard, but trading block or whatever. It's just you get so far in your head with all of this stuff going around that it almost just inhibits you from acting normally. And it's like writer's block. You can't think, and you can't think of what you want to say or how you want to say it. So for me personally, and as we close this out, I kind of want to ask you this question. I'm going to answer it myself first, but how do we want to go into the near term future thinking about all these biases and how we want to take our mental and how we want to go forward, realizing what is happening and how we want to proceed. So for me, I'm thinking I must take a step back and spend a lot more time observing, a lot less action and a lot more inaction. Just even if I'm missing out on something, I want to prove to myself that it's okay for me to miss out on a big move. It's okay for me to watch all of Friday and not feel bad about it. And honestly, that gives me a sense of mental power that I had the willpower to just watch and observe and see it happen and not feel some urge to be a part of it. What about you, Bones? What's your in the forefront of your mind at how to tackle this going into next week?
Yeah, I'd say first off, Monday's a new week, right? So this war news, the war news started when finalized. I'd say more Wednesday night, and it's continued on, right? So I'd say the market has responded pretty bullish on what we would consider bearish news, but just being able to realize, it's still going on. This conflict's still going on, but the market tends, or in this case, seems like it's not caring as much about it. So go in with the mindset, both sides can happen. And the real thing that's driving the market right now is those support and resistance levels, and being able to overcome support and resistance. Just trading that price action as opposed to letting our bias get in play, and then to go off of that, I'd say you know, having risk management and realizing when to step back. Maybe you trade two or three bad times in a row, and you're like, that revenge trade comes in. You're like, oh, I got to make that money back right now. Just step away, like you said, and realize, I need to preserve my mental capital because if I do lose this trade, right, it's going to be even worse. But I can always take some time, think about what happened, um, go over, analyze what happened, and then get back into it tomorrow. The market's going to be there tomorrow, but money isn't always going to be there, right? Like if you blow up your account, you got to put more back in if you want to trade again, or if you don't have the funds for that, like you got to wait, make money, stuff like that. But the market will always be there. It's not going away in the future, at least as I see, unless there's some news I don't know about. But just being able to trade tomorrow, preserving not only your actual capital but the mental side of things, and that mental side that we talk about so much is way more important than the actual gains and losses. If you aren't 100% in to a trade where you're not locked in, you're thinking about different things, it's perfectly okay to take a day off and work on your mental side of things. Get your mind right, get your body right, whatever you're feeling. If you have no motivation or lacking some motivation of recent, it's perfectly okay. Go do the things you love, focus on other things. The market will be there whenever you're ready to come back.
Yeah, you're exactly right, man. There is nothing wrong with taking a break, taking some time off if you need it. If that's the best thing for you, then do it. At this point, we all need to be doing what's best for ourselves, what's best for our mental health, and just to keep ourselves intact in order to perform at our best. So, Bones, this has been another great conversation, man. I've really enjoyed this. And honestly, I think I've really enjoyed talking about this because this is stuff that needs to be discussed. I talk about this with people on a regular basis. And I think that it's just all of this stuff going on in our head. It's crucial that we really dissect it and realize what's going on behind these thoughts. What are the emotions, the things that are triggering these thoughts? So I appreciate getting together with you, man, and I'm really excited. I'm really excited for everybody to hear this one.
Oh, absolutely.